Hello viewers, welcome to our GST class. Today's subject is composition scheme. The theme of the subject is why you need to think twice before opting composition scheme. I repeat, the theme of today's discussion is why you need to think twice before opting composition scheme. As you know, that composition scheme is very popular in India. We have total 1 crore 25 lakhs registered taxpayers. So far we know around 80% of the total registered taxpayers fall within the category of composition scheme. Our basic intention of discussions today is to explain why you have to think several times to decide whether you will go for composition scheme or normal tax payment scheme. First, I will discuss what are the major benefits of composition scheme. I find the benefits are confined in 2 or 3 areas. Which are those areas? Because you are to pay tax at a lower rate, from 1% to 6% depending on the material. There is no major compliance. You have to file only one return quarterly, 08, and also to file annual return in GST year 04. So we find 2 major advantages. One, rate of tax is very low as compared to the normal rate of GST. And 2, compliance burden is very minimum. Only one return quarterly in CMP 08 within 18th of the following quarter and annual return. So people are very happy, they get the registration. But before you opt for this registration, you should also know certain basic points. Are you really losing money because of opting composition scheme? Are you really losing profit because of opting composition scheme? We must know that. But before I come to that, let us discuss certain important features of the composition scheme. What composition dealers cannot do, that you have to understand. First of all, the composition dealer's turnover has to be less than 1 crore 50 lakhs in respect of manufacturing, trading, etc. So basically it restricts to the small taxpayers. That is fine. But in the process, if you take a registration as a composition taxpayer, you cannot sell any goods on interstate basis. That means from West Bengal to Delhi or West Bengal to Maharashtra, you cannot deal. You cannot do any exports. Composition dealers are only to sell goods within the state. So export is blocked. Interstate trade, you cannot do it. And third most important thing, that e-commerce, the composition dealer cannot sell its goods to the e-commerce or transfer its goods to the e-commerce. That you have to always deal directly with the customer. But today you must be knowing that the business through e-commerce is increasing manifold. Several e-commerce companies are now there. And I can tell you, these e-commerce traders or e-commerce operators, they buy more than 80% of their materials from the small manufacturers. So if you opt the composition scheme, your sale or expanding turnover through e-commerce dealer is absolutely zero. These are the three very important points you have to recall. And fourth and fifth are very, very important. That as a manufacturer or a trader, when you buy any goods as a composition dealer, you pay full GST to your supplier, but you cannot take any credit. Assuming the average rate of input tax is 10%, this 10% of the raw material cost, in normal case, you are entitled to get back from the government by way of ITC. But if you are a composition dealer, you have to pay the tax, but you cannot take any credit. So that is a cost. Secondly, the composition dealer cannot issue any tax invoice. They have to issue bill for supply. And the tax, whatever they have to pay for the supply, is to be borne by them only. Their customer will not take that cost. So if you are a composition dealer, you have twofold cost extra as compared to the normal dealer. Like ITC, which you are losing on your raw material, if I consider around 10%. Now, the tax which you are charging to your customer, which is ranging from 1% to 6%, say if I consider 1%, so total 11% cost you cannot recover either from the government or from your customer. So this you have to consider as your additional cost. You have two options. One, to adjust this additional cost against your profit, that means your profit will come down. Or you can think to transfer it to your customer by way of increasing your price. But why your customer will pay? If customer buys the same material from a normal dealer, customer will get the full ITC credit. The supplier will also get the full ITC credit. So there will be a difference of price between a composition dealer and a normal taxpayer. And as a result, you may find that the large companies or even medium-sized companies, they may not like to buy goods from the composition dealer because of the price disadvantage, both on the parts of the composition dealer and also on the part of the customer. Another fourth point which you have also to consider, that if you are a composition dealer, but if you consume any services which is under reverse charge mechanism, the composition dealer is not exempted. They have to pay the reverse charge mechanism like on advocate's fee, security services. There are many areas, transportations, GTA, wherein the composition dealer has to pay the tax at full rate, but they cannot take the credit. Whereas in case of normal taxpayer, they can pay the RCM and they will also get the benefits. Now, if you summarize this, you find that your advantages are confined only in 2 or 3 areas, that your compliance burden is and your rate of tax is small. But rate of tax is borne by the customer, so what is your problem? But in case, if you compare it with the composition dealer, you will find there are distinct disadvantages. First of all, you are barred to expand your business. To expand business, you need to sell your goods outside the state, that is interstate, which you cannot do. You cannot do exports. You cannot sell it through the e-commerce dealers. So, you are forced to confine your turnover within 1.5 crores. Secondly, cost. Your cost will be comparatively high because of 3 reasons. One is non-availability of input tax credit. Second, your tax, whatever you charge to a customer will not get credit, so you have to bear it from your own pocket. And third, the reverse charge mechanism. The tax which you pay on RCM, that you have to bone it, you cannot take credit. So, please, before taking any decisions, whether you should be in the normal scheme or in the composition scheme, please make a cost-profit analysis and find out what is your benefit and what is your loss. Compare it. If you still find that composition scheme is better, you go with it. I am not suggesting, but please verify and do the necessary cost-profit analysis to find out which one is beneficial. Compliance is not an issue. I do not think compliance is a basic issue because today we are filing everything in online and things are extremely nice. So compliance could not be a major issue. So therefore, please re-review your entire analysis and find out which one is good. One more point I would like to add, that suppose if you have 5 different divisions, say chemical divisions, engineering divisions, then consumer divisions, pharmaceutical, suppose you have 5 separate verticals. You cannot take composition scheme on a pick and choose basis. If you have to choose composition scheme, you have to choose composition scheme for all the verticals. That is another disadvantage. So therefore, composition scheme is a very easy scheme. It is made basically for the small traders, small manufacturers. But if you want to grow further, if you want to expand further, probably you need to think twice whether you should go for a composition scheme or you will come under normal tax payment scheme. Again, I would like to tell you that composition dealer cannot issue tax invoice. They have to issue bill of supply, and on the invoice they have to clearly mention that they are a composition supplier. The basic reason is that the customer who is buying your goods, they will not be allowed to take credit in respect of composition tax, which is charged in the bill of supply. So therefore, friends, please review and take the decisions. Those who have already taken composition scheme, they can review it and they can convert themselves to a normal scheme, and also those who are thinking to take registrations, they must consider these 3-4 points which are not in favor of the composition scheme. Friends, if you like these deliberations, you have 3 jobs. 1, please like it. 2, please share it. And 3, please subscribe this channel. This channel is an educational channel meant for tax consultants, students, particularly in the areas of macroeconomics, finance, insurance, and foreign trade areas. Thank you very much for your patient hearing.